Thank you. Hello everybody, my name is Keith and this is my business partner Sam, and thank you very much Jed and Mark and Iko for allowing us to speak tonight. We're going to take about sort of 20 minutes or so and introduce some UK alternative property investments. Quick bit of background, we came to Asia in 1993 and we've been property investors in Macau since 2003, since SARS. And we started the property investment with that. Sorry. We started the property investment when SARS came around, and from that property investment grew a real estate agency, followed by a management company, followed by a renovation company, and it just sort of grew organically. And we have ended up, by the year sort of 2015, we ended up looking after close to 200 properties with a value of well in excess of about 1 billion Hong Kong dollars at the time. Since that time, then Macau has really peaked, and we found that as investors ourselves and with our clients, we were looking for other opportunities to invest. There were several problems that we encountered that I'm sure we've all encountered if you're interested in property. We've all sort of looked around and tried to find alternative investments or look for other places to put our money. We find that Macau had reached what we consider to be a pinnacle. We were asset rich and time poor. We have clients who wanted to find different investments to different places to put their money, and the UK was a very natural place to go and look, given all of the turmoil that Brexit had caused, and of course the exchange rate as well. The exchange rate is obviously trading at a magnificent discount at the moment. So that's what sort of took us over there in the first place. So Sam and I started this process a couple of years ago, and we primarily do three types of investments in the UK. We have buy-to-let properties which we buy in the north of England, and they're simple buy-to-lets. They're very straightforward procedure. We buy the property. We usually buy older properties that require a lot of renovation, properties that other people won't touch, and then we refurbish them. We regenerate them, and we spend some money on them, and we lease them out. This is an example of one that finished recently, purchased for 37,500, as you can see, and it took about sort of 4 months or so, and it's quite an attractive rental yield. But it's obviously not going to set the world on fire, and these are pretty simple, straightforward investments. We also have other investments in the Midlands, and we also operate things called HMOs. Anybody know what HMO is? Home of multiple occupancy. Great. And you guys know that. We take those properties, we split them into smaller units, and when we first saw these HMOs and we went to look in the UK, we weren't that impressed. We really were considering not doing them at all. But we changed our minds when we found a very, very good renovation company that would help us to get up to really high standards. And so we've got a few HMOs in Birmingham, and again, very attractive yields, and it looks great. This looks like a terrific yield at 19 point.
Because I can't really see.
Oh, I'm sorry. This yield is 19.2%, but it's a bit misleading. That's a gross yield, and on these HMOs there are costs involved with that as well. One of them being, for example, we cover the utility bills, we cover management bills, that sort of thing. So about 1/3 of that can disappear in monthly costs. So
sorry, how many rooms is that one?
This one is 5.
5.
Yeah, we've got anywhere between 5 and 7. 5, 6, 7 rooms in each one.
Are they usually students in these HMOs?
Well, there are really 3 clear markets for HMOs in the UK. One of them is students, one of them is that sort of blue collar workers, and one of them are the professionals. And we tend to stay away from students. It's a personal choice. The reason we stay away from students is because many of the universities now have cottoned on to the fact that they've got plenty of land at the school, and they can turn their land into a profit-making business by putting rooms on the land. So overnight, you're finding that many of the universities are now building their own rooms and having people sort of live on the outskirts of the university, and they're managing those things themselves. So we can find that that market sort of disappears overnight. So we tend not to focus on the student market. We go for blue collar and white collar generally. And the third type of development that we do is this is the developments in London. In London, we take properties and we split them, we develop them, we add value to them. In this case, we've got a project that's running at the moment. It's in Fulham, and it's a small project, and we purchased that property for 575,000. Renovation costs were 170. By the time this sells, it'll go out at about 1.1 million. There's a couple of flats there. In London, we tend to aim at the market of £600,000 and less, because there's a help to buy scheme in London. The government will help with the deposit for first-time buyers. So we can, if we can, we aim at that market. And
Sorry, is that when you're converting it to HMO?
no, we're converting this. This is just a straightforward development where we have taken a property, we split it, and then we sell the properties afterwards. So we've got buy-to-lets, which we hold on to. The developments in London, typically what we do is we develop them and then we sell them, and then simply move the money up north where all the yields are.
Is there often a planning permission to split?
You do.
Is it complicated, or is it because it's internal? Is it relatively straightforward?
Depends who you work with, Jason. In this instance, we work with a company called Handy Heroes. It's these guys. There's a whole bunch of their projects that they've done, and we're actually forming a partnership with these guys. They work very much, as you can see, in the sort of primarily in the south of London. So if you know the planning officers and you know the architects, then it's relatively easy to get stuff through. If you're going in blind, it's more difficult, of course. So Handy Heroes, we're working on a partnership with these guys now, and one of the things that differentiates the property investments that we have, that I think other people might present to you, is that Sam and I believe very much in skin in the game, and we put our own money into these projects. We're not asking for investors to help us with the projects and then just use the investors' money. We put our own money into the projects, and bearing that in mind, we also work with Handy Heroes in the same vein. These guys are going to partner with us for future projects rather than just be a construction company. Our investors have primarily two options, two ways of putting money into these investments. Number one is through very simple term deposits. Term deposit is a fixed interest rate for a fixed period of time with fixed amounts of money, and the interest rates vary. They go between 6 and 10% depending on how you put the money in, how long it stays for, etc. We also have joint ventures, and joint venture is more of a partnership, and the partnership is obviously a higher risk, higher return. So our joint venture partners, they come in with an equity stake. We generally will go and buy properties using our own money rather than debt, and we'll develop those. We usually, again, use our own money. If we need a little bit of debt, we might use a little bit of debt, and then primarily we sell them afterwards. And that's how joint venture works, and everybody shares in the profits as partners. This is an example of the term deposit rates currently. We do have another system of term deposits for smaller amounts, which we work with a company called P1 Capital, who are based in London. They've got offices in Mayfair, and these guys, this platform, works for people who are going to invest smaller amounts of money, typically just anything from sort of £1,000 upwards. And recently we've discovered that a lot of our clients, a lot of our long-term clients, are keen to invest in the UK because of the exchange rates, because of Brexit, and because of the turmoil that's there. People are keen to invest in the UK. But one of the problems and one of the challenges that we had and we have with our clients is that they want to own stuff in the UK as well. So we developed a program now that we're introducing where our joint venture partners, our term deposit investors can put money into developments, into the buy-to-lets or into the HMOs. They can do so through term deposits and joint ventures. And on the other side of that, they have an option to buy the properties that we are developing ourselves at a discount to the market price. So our investors have effectively the best of both worlds. They get an investment that's going to make money, and at the end of it, or somewhere in the middle of it, they have the chance to buy property below market value as well and convert their original amount of money plus their interest into a property that they can then buy and hold. And of course it can be a cash producing asset. It could be for example, a buy-to-let with a rental yield of, as we saw earlier, sort of 10% or so. And we have very good feedback about that program, and we're just introducing it. We're just introducing it now. Next slide. So these are the first projects that we did. We did 6 projects in the UK from last year, and it's the first tranche of the projects that we've done. We are just coming to the end of those projects, and we're now working on the new and second phase of the projects, which Sam is going to introduce in just a moment. So, Sam, over to you.
Thank you, Keith. Sorry for the small screen, guys. I know that I'll try to explain. If you can't really see anything, just point it out. So my name is Sam, and today I'll be speaking to you about the upcoming projects in our pipeline. Well, when investors think about real estate, they think it's a static thing. They think of a static asset, fixed mortgage, fixed rental income. But there's actually, as investors, we know and understand that there's nothing really static about it. It's very fluid. And there's 2 types of flows that are very important in real estate. And that's, first of all, cash flow, how much cash comes out of our assets. And the second is deal flow, how many opportunities come across our desk for us to choose from. And as investors, from our experience, we learned that keeping promises is one of the most important things you can do with brokers, with our partners, with everyone in the UK that we deal with, and of course with our investors. And in the UK so far, we've been very proud to say that we've been keeping all of our promises to our brokers and sourcing agents. And because we've proven ourselves, they've started to bring us more interesting deals. So we have one-off deals like the buy-to-lets and the HMOs and the developments that we spoke about. But now we're finding ourselves coming across more different, larger, interesting deals that are quite unique and on their own. So some examples are here. I know that you can't really see it, but there's a large HMO in Dudley that we're looking at. These are all projects that are in our pipeline. In our pipeline meaning that we've made offers on them, we've done our homework and our due diligence, but we are not 100% sure as of yet whether the offer is going to be accepted and the project's going to proceed, because obviously we will only buy at the right price. So there's a large HMO in Dudley that we're looking at. We already have an HMO project in Dudley, so we're very familiar with the area. A buy-to-let portfolio in Wales. We're less enthusiastic about this one, but the numbers work.
Jed?
Yep.
Yeah. Okay. And there's one project that stands out for us at this moment, and one project that we're really enthusiastic about. And we're going to see it in just a second. But I'll give you guys a spoiler. It's a portfolio of properties in Stoke-on-Trent. Stoke-on-Trent, it's this one right here. And in this portfolio, there are 51 individual properties. And we're really excited about this because it's not an ordinary deal. It doesn't come from a regular seller. The seller, actually the owner of this portfolio, got into some trouble, and he's in a position where he has to sell, and the CPS, the Crown Prosecution Services, has to offload this asset for him. And of course, these guys are unemotional. All they need to do is cover their debt, and and so we have an opportunity here to get a massive discount on the entire portfolio. This is where Stoke-on-Trent is located in the UK. It's above Birmingham, but it's below the Manchester area. And like I said, there are 51 properties, and most of them are residential. And that's good for us because right off the get, if we acquire this portfolio, we're going to see cash flow. It's going to start to pay off our debts for us from day one. And the remaining properties, some of them are commercial, and they have massive development potential. They're very derelict. You'll see a picture in a second, but they have massive development potential. They're on the high street in Stoke-on-Trent, in the Fenton area. This is an example of the residential properties. A lot of them are on this street, Oldfield Street. And in the next slide, we'll see one of the commercial properties. So obviously needs some tender loving care, but we see a lot of potential. You know, people would run away from a property like this, but for us, it looks like a pound of gold.
Is your intention to turn it from commercial to residential, or is your intention to keep the use of it?
Well, for the commercial ones, we'll develop it and we'll keep it commercial. We're not converting usage at this point. So a couple slides back, please. Sorry. Just some quick numbers for you guys. The market value of this portfolio sits around 2.6, and our standing offer is 1.71 at this moment. So right off the get, because of the rented properties, we'll achieve a rental yield of 11%, but some of them are vacant, meaning that we can optimize the rental income, and if we do so, we can achieve up to 16%. Yeah. And as Keith alluded to earlier, with the investment scheme like the term deposit, what investors are able to do are essentially give us a term deposit, earn an interest rate of 6 to 9% on that, and if they wish to, at the end they have an option of purchasing some of these properties from the portfolio. So a quick example would be this: a term deposit of £200,000, right? About 2 million, because at this moment the pound sits at about 10 Hong Kong dollars. Today it was actually 9.7 something, but about 200,000. After a year, they're going to earn a 7% interest on that, so that's going to turn into £214,000. And if in that period, Brexit, the uncertainty clears up and the pound jumps, if it goes to up to 12%, which is the historical average, the investor can walk away with Hong Kong dollars 2,568,000. So they'll see the currency advantage there as well. But if they don't want to take the money and go home, they say, okay, I want some properties in the UK. What can I do? Well, they can buy some of the portfolio properties. Actually, they can buy 5. If the market value of most of the residential ones are 45, and the investor would get a discount and purchase it at 42,000, giving them an immediate equity of 3,000. So across 5 properties, that's 15,000. Free equity for the investor. And of course, these properties will produce cash flow. Per month, we're looking at about 1,700, and of course, over the long term, they'll see equity appreciation as well. We also have partners, other developers in the UK that feed us deals that our investors can jump in on if they wish to. This is just a quick example of one of those properties. It's a conversion in Market Harborough, which is in the East Midlands. And this property right here was owned by the Symington family in Market Harborough, which used to produce all the corsets. They own the corset factories in this area, which they're famous for. Very quick numbers: purchase price 1 million, renovation 2 million, you're in for 3 million. On the back end, sales price is 4.4, of course, so the gross profit, very rough terms, 1.4. So these are the kind of projects that other developers in the UK give to us to find investors for. And coming back to the London developments, because we realize that everyone in Hong Kong likes and loves London. We've all probably been to London, and we're very happy to announce, as Keith mentioned, our partnership with Handy Heroes. These guys are ex-military personnel that are in construction now, and they are going to JV with us. What that means is that as equity partners in the projects with us and our investors, they'll be personally invested in the project. That means they're going to want to do it faster, they're going to want to do it cheaper, and they're going to want to do it better. So even the best contractor in the world, guys, would work harder for themselves than they would for a client, right? So in this case, they're on our side and they're going to work really, really hard. And these are some of the projects that they're bringing us to find investors for. One of them is a church conversion in St. Michael's, which I'll share with you in 1 second. Another one is a hotel conversion to 5 houses in East Dulwich, an area that's very famous for the schools. Another opportunity is the flat conversions in Clapham, and of course some partly completed new builds in Clapham as well. But the one that I want to put the lens on today is this one, this church in St. Michael's Church in Fulham. It's not very far from the Fulham project that we shared just now. It's actually 5 minutes walking distance. And the opportunity here is to take the church and to build 6 residential flats and some commercial units in it, or if we can manage to extend the planning, build 9 residential flats, which would push up the sales price on the back end. So there's planning for 6 plus commercial at the moment. It's been approved and the architect drawings have been done, but it can be extended to 9. So this property sits in Fulham, as you can see. For those not too familiar with London, to the north of Fulham, you can see Hyde Park, Kensington Place, Buckingham Palace, all the moneyed places in London. And to the east, you'll find the City of London and Canary Wharf and all the financial centers. And if you zoom in a little bit, you'll see that it's right across Chelsea, and the famous Chelsea football stadium, of course, is kind of within walking distance as well. So very quick numbers. Purchase price for this would be 2.5 actually, but with the buying cost, 2.65. On the back end, depending on whether we get 6 or 9 residential flats approved for the planning, we're looking at 7 to 8 million in sales price, in sales profit. So after all the expenses, I don't want to bore you with the details, but we would walk away with roughly 1.2 million in gross profit, giving us a rough 20% ROI, depending on the cost involved. And of course, this project is estimated to be about 12 to 18, but of course, you never know what happens with these projects, and it might be a little bit longer, but that's the estimation of the time frame that we're looking at. This one, the term deposit option is also available, but investors can joint venture with us, meaning they can have an equity stake in the project, in the St. Michael's Church conversion project, and at the end of it, if they wish, they can turn their equity into a nice flat in Fulham, if they wish to have one. Or we can cash out of the project, sell the assets, and everyone can walk away with a bag of cash. So, just to bring it full circle, Keith started the presentation by saying that the Hong Kong market is too expensive, yields are too low, there's no cash flow, and it's not really an option to keep our money in the bank at this point. So what's our solution? What are the actions that we have taken? Well, we've started investing in the UK. There we found cash flow. We found opportunities to add value to properties because these houses are not apartments. They're not restricted. They have land to extend. You can extend the loft. You can change the usage. There's a lot more freedom and creativity with these properties as long as you can get planning permission. Capital growth is still there, 4 to 6% in areas like Manchester, Birmingham. Not as crazy as the Hong Kong in the heydays, but it's steady, and we like that better. And of course, we can build equity over the long term through our portfolio. So, I would like to end this presentation by extending a small gesture to everyone here. The Epic Property Investors Club, in short, Epic, is not just a company that buys and develops properties in the UK. We are a club of investors. We are a club of investors who want to grow and protect our wealth, and we want to find not only financial freedom, but financial self-reliance by owning our own assets and having control over those assets. And what we want to do is, at the end, have a pool of investors in this club that can finance all of the projects that come through. So we currently have 250 investors in the club, and when we get to about 1,000 or maybe a little 1,200, we feel that that would be enough investors in the pipeline to finance all of the projects that we want to pursue, all of our best projects. So what I would like to do today is extend an invitation to all of you to join the Epic Property Investors Club. It doesn't come at a cost. All you need to do, you'll see in this invitation. Is that the final slide?
Oh, I'm sorry. There's way with the fairies then.
In this invitation, you'll find a simple sheet that looks like this. So to join the Epic Property Investors Club, all you need to do is provide us with your name, your email, and some of your personal details so we can put you in our database and share our opportunities, share our experiences, share our knowledge with you guys. And sometimes we arrange personal, intimate networking events and other presentations as well. And if any of the projects that we've shared with you today looks interesting, please let us know. We are taking pledges. So these projects are not 100% going forward because the bids have not been accepted, but we will take pledges today. And if they do go through, you will be given priority to invest in these projects in the amount that you pledge. So the pledge is non-binding. It doesn't require to do anything. It's just to show us an interest so we can reach out to you if these projects come through. So, and of course, if you have any feedback for Keith or I, please share them. Please feel free. And I'll be handing out these very soon. So, ladies and gentlemen, thank you for your time. Thank you very much for gathering here today despite the rainy weather, and look forward to speaking with you in person. Thank you.